Hello, everybody. Tim McCormick here. Thank you for coming on to our training today on this Friday, this stormy Friday. Hope you guys are all doing great. If you were on our training yesterday, then what we're going to be doing today is going back over some of the stuff we talked about yesterday and starting to talk directly to each of you about how we can apply it. Before I get too far into it, can I get somebody to confirm that you can hear me and see the screen? Awesome. Thank you, Brett. Appreciate it. Okay, so I have been, took longer than I was hoping. Unfortunately, I was trying to get the whole market, we're completely redoing the market focus workbook that all the offices are going to be doing. So I'm hoping to have it done before this call, but it is only about 70% done, and I don't want to launch it incomplete. Very soon, by Monday at the latest, you guys are going to have the workbook, and then you'll need to go through these questions and answers with your PM, because frankly, you guys have got to apply these things for your business if you want to be growing. Now, some of the people who are on the call, even looking, this stuff's going to be pretty straightforward, right? So if you, for example, open a member office with us because you already have another successful business, like for Suzanne, she's doing taxes. This whole thing's going to be easy, and in fact, is almost not super relevant because you know the clients you're going to have coming through without trying. That's going to be your base. But you're going to want to go through these steps if you want to grow beyond that base in order to get more of a specific client. And it's better to get a lot of one kind of client over and over and over again than everything under the sun, which is what you're going to get if you don't specify. So I'm just going to start knocking through some of this stuff and start going through these decisions. What I'm hoping is I can, the other day I sent out an email asking for everybody's target focus, and I want to tell you one of the ones. I'm just going to read one of the responses I got, and nothing that I'm saying here is intended to, I'm not trying to make somebody look bad. I want to make sure you guys don't get that at all. But this is the focus that I received. The focus is CRE, UBF, and RBA. That's the focus. It's the whole thing. And I'm hoping that if you listened to the training yesterday, they understand why that is incomplete for you guys to actually succeed. The first thing you want to do is choose a target product or a product mix. There's nothing wrong with having 3 products that you want to be good at, but what you want to do is take that the next 2-3 steps down to something that you actually have a way to market. Just saying that you have 3 products, well, you might as well say you have all the products, right? What's the point? I mean, you're gonna learn about all of our products. You want to get really good in some. There's nothing wrong. And I'm just thinking out loud. So CRE, that's real estate, is going to be great for people that want to do a lot of real estate deals. Marketing for that is worlds apart from marketing for revenue-based advance. That is not the same client at all. And so how do you market for CRE and RBA at the same point? Well, you can't really, right? Unless you're trying to market to businesses that are trying to buy buildings but can't afford it because they have cash flow problems. Again, those are different clients, right? Somebody who's trying to buy a building probably has money to buy a building, and they probably don't have cash flow problems, which is where they're looking to get a revenue advance. It's not cash flow problem, maybe isn't the best way to put it, but revenue advance is bad rates on, sorry, I'm going to mute because I'm getting some background noise here. Revenue advance is, I guess I'm hoping what you're getting out of this is that they're very different. And, like if you want to do CRE for fix and flip, that actually goes very well with the credit card program. Somebody comes in, they need working capital, they need money for their fix and flips. Maybe they finance the fix and flip directly through a fix and flip program, and then they get working capital on the credit cards on the side. Those are 2 programs that work very well together, and that makes a lot of sense. But only if you're targeting fix and flip. If you're looking to target the long-term real estate investor, or let's say somebody wants to get cash out of a building because they're in a distressed situation, which we service lots of. I mean, I feel like we have more clients in that situation than another situation, the CRE program. For example, we had one lady that owned a building, needed to pull money out in order to pay for tenant improvements. That she didn't have good credit, and that's why she couldn't go get a traditional loan. If she didn't have good credit, she's not going to qualify for the credit card program. So if you're going after distressed, sort of somebody pulling money out of a big piece of property or real estate because they can't get a traditional loan, you know by default they don't qualify for the credit card program, and that's maybe not a good target for you. So your target mix should really work together for you within your target focus, and that's what I want to do. Really, if you come to me and say my target is 3 programs, I'm going to say, okay, but what's the most important one? And that's probably the one you're going to do more of, right? If you're coming to me with the CRE for fix and flip and the credit card program combined, that's awesome. But still, probably the primary one is the fix and flip real estate loan. That's actually more important, and you might make as much money off getting people in the credit card program, but still you're targeting CRE fix and flip, and then you get the credit card deals at the same time. You're not focusing on both. I mean, you could, I suppose you could target the fix and flip industry with a credit card program and then also pick up the fix and flips at the same point, but that approach is going to be very different. And you have to know your approach before you go in, as opposed to just figuring it out afterwards or just picking up whatever. There's a lot of people that target the fix and flip industry. So if you want to target the fix and flip industry by coming in with a credit card program, that is different. That's going to make you different from other people. And maybe that's a good angle, right? But at least know what that angle is. But if your goal is really to get a bunch of credit card clients and you go in marketing our fix and flip program against other people and you're not really versed on that, and really your goal is to get something else, you're shooting yourself in the foot and giving yourself a disadvantage from the get-go. So know your products, know your product mix, and know which one is your number one important one that's really going to be determining the rest of your decisions. Beyond that, your target client, again, I hope you're hearing from the way I talk through this stuff. If you want to target a specific person, you need to know who that person is, or business. You need to know what that business is. You need to know the product size and everything. So I'm curious, who on the call knows what their number one product is that they want to do beyond anything else? Brett, are you able to comment? What would you say is your number one product, Brett? Okay, so Suzanne is mentioning the credit card program. All right, credit card program is good. We've done that for years. I mean, we've done hundreds of millions of dollars in the credit card program, and it's that could be good for accounting. If I was in your shoes, Suzanne, I might be thinking term loans. The credit card program is a little faster. The term loan has good commissions, and people are going to love it. So that's something to think about. Don said he wants to target fix and flip. That's great. If you're doing fix and flip, then I'm assuming that your target focus product for the fix and flip industry would be either CRE, maybe the credit card program. Retirement rollovers are actually good. A lot of people don't know that you can use 401k funds in order to finance fix and flips, and we have a way to facilitate that. In the fix and flip industry, a lot of people do self-direct IRAs, but for people that have money in a 401k and they don't want to put it into an IRA, here's a way that they can grow a business. So that's something that you'd want to potentially know about. But on the other hand, if you're targeting fix and flip, you probably don't want to spend a lot of time learning revenue advance or SBA loan stuff, because that's not going to give you a lot of benefit. I would make sure to know obviously all programs. It doesn't take long. Go through the benefits and documents for those programs so that you have a high level of awareness of what it is, but then deep dive in the programs that you're going to be doing a lot of so that you're experts in those. All right, so Suzanne says some of her clients have great credit but limited gross revenues. All right, that's a great reason why the credit card program would be excellent for them. Also, retirement rollovers could be good. Retirement rollover maybe isn't the highest paying of all of our products, but don't forget, everyone, it is literally the best way for someone to finance a business, because they finance it with no debt, and then imagine you're giving a loan to yourself, and this interest rate, that interest money you would be paying to a bank, is instead going back into your retirement funds. So it's a win-win for somebody to be able to invest in themselves. So I won't go on about that a lot. But anyway, target and product mix. And one of the things I want to mention is that we're constantly coming out with new products. We're going to be rolling out some residual sort of side income products over the next, well, continually, forever. And I want to make sure you guys understand that we come out with new products, and some of them are going to be relevant to you, and some of them aren't. And focus on them. I wouldn't say focus on them, right? When we come out with other things, they're often side products, right? Know they exist, do referrals when you can, but don't focus on those. You always want to pick an industry and all these targets I'm talking about, pick those focuses and stick on those. And if there's side things, you could do side, and like Suzanne could be picking on you a lot today, but we've launched a partnership with ADP, and you'll be able to offer payroll services and get a good residual on those. That's something you can add, but you don't want to turn it into your focus in any way, right? You still want to focus on the financing, or of course for you, the number one focus for you is your regular accounting business, and everything that we have are side revenue streams where you can make extra money. We'll be launching that next week, I believe. All right, so know your product market and the product mix, and discuss that with us, right? This should be a discussion you're having. Say, hey, I want to do these couple things. Let's talk about how they work together, and we can predict when it will and won't work, so we can target the times that it will work. All right, so industry geography. I'm actually expanding this a little bit to, I'm switching this to be geography first, industry second, and then company size. We definitely want to make sure to add company size in there, so the market targeting companies we can actually help. Your target situation. I'm putting together the worksheet to really dig into that a little bit. And your target situation is really going to be dependent on the product you're choosing. That's one of the reasons why I had product first. And again, you want to know that. Are you going to be looking for situations which are positive situations? Somebody's growing or doing well. That'll be good for some kind of products. And then distress situations. Somebody's in trouble, they're defaulting on debt, or they need assistance, or they have a pending expense coming up very soon. They don't know how they're going to be able to meet that obligation. We have very different products that service those. Make sure you know what your focus is so you can be really good at that, and you can beat other people who are only sidelining at it, who only do it every once in a while. Did anybody have any specific situations that they have been thinking about targeting in their business? So I'll give you an example. If you're doing fix and flip, it's relatively easy. I'm looking for somebody who's about to do their next flip and needs money for it. So some of these ones, this answer is so simple that it's a non-issue. In other ones, it's not so simple. So if your industry is manufacturing, in order to use the example yesterday, you got growing companies, you want to be looking at term loans or equipment finance, or companies that are in trouble, you want to be looking at revenue advances. Either way, they could use a retirement rollover. Companies that are in trouble might want to do the CRE. When I say CRE is for distress situations, the reality is our private money real estate program is more expensive than traditional bank financing, which is sort of goes without being said. Somebody who's doing really well and has real estate assets, they potentially qualify for an SBA loan. That's going to be way cheaper than going and get a private money loan. So if you're targeting companies that are growing, then you want to be really good at those. If you're targeting people in distress situations, then CRE is more likely to be what's going to service their needs. And then, as I mentioned on the other training, a target agent, I really think all of you should start your marketing through referral sources. There's a lot of benefit to it. Mostly you're going to make sure not to spend a bunch of money chasing something that doesn't work. We had an office come on a while back, and they picked a target focus, and they started going after that. And that particular focus didn't seem to work out for them. I'm not saying other people couldn't do that, who I don't know, but it didn't work out for them. And the good news is they didn't spend $30,000 in marketing for something that eventually didn't work out for them. They just spent a couple weeks of calling people and realized that's not something that they wanted to focus on for the next 5 years. And that is a ton of money that was saved, right? And we were able to then help the member office focus on a different situation. And then finally, your tactics. Your tactics really should be, how are you going to bring on the agents that are going to bring on your target client who's in your target situation in order to help you get that product that you want to provide the most of, that you make the most money on, that you like offering. And again, like offering, all right? Let's talk about that a little bit. Some of you, I'm not telling you what to think. I'm just throwing out what I hear from people, and I'm not trying to create your reality, because a lot of offices are very different. There's some offices that hate the working capital loans because they are expensive, all right? And they just are. You know, somebody comes in, they borrow $100,000, they're going to pay back $145,000 over 6 months with daily payments. You got to be able to present that in a positive light to somebody. And by the way, we're not trying to force somebody into that kind of loan if they have other options. If they have other options, great, we'll give it to them. So we're not out there trying to shove somebody into something that's not good. But I have offices that they feel bad offering that rate even when it's the best thing for that client, because it's the only thing they can qualify for, and it's the best way that they can get money, and it's fast. I mean, there's benefits to the program. There's some offices that hate offering it. So if you don't want to offer that kind of a product, you better be focusing on companies that are doing well and growing and have assets and resources and things going for them, so that you don't end up in a situation where that's all that you have left to offer. So know your product so that you build. We can structure your office to be just about anything you want. And if there's products you hate offering, then don't put yourself in a situation where that's all you're going to be offering people on a regular basis, right? Like if you hate the revenue advance, don't go after the restaurant industry, because restaurant industry, often that's all they can get, So it's by taking the time to work through these questions in advance, you're going to put yourself in the situation where you can run the kind of business that you want, and you can succeed and make money. Yeah, you may be on here thinking, I love the retirement rollover product, right? Which is a great product. I mean, there's more benefits to that product than just about anything else, but it's a little bit on the lower on the commission side. And if you don't find a way that you can do 5 to 10 a month on a regular basis, you're going to be struggling to support your costs that way if you want to bring on a sales team underneath you. Some of the other programs can pay 3, 4, 5 times as much money, but then you got to be comfortable with telling somebody on a real estate loan that they have to pay 6 points origination or whatever it is. If you have trouble presenting those kind of rates, we do it for you. But anyway, I'm just sort of going over these things so that you're prepared for it, because if you're offering something halfway, if you think it's a bad loan and you offer it to somebody the whole time thinking it's a bad loan, they're going to feel it. And even if it's the best thing for them, they may not do it. And guess what? They're going to hang up the phone and they're going to call the next guy, and the next guy is going to have a more positive attitude about it, and they're going to sign up with them because they need the money and it's the best thing that they have. And you got to get behind it. Sales is like that. You got to believe in what you're selling. And I'm not saying that you should change how you feel. If you don't believe it's good, great. Let's not do that. We have a lot of options here. We have ways that you can offer other kind of products. Let's just make sure to structure your office so that it serves your reality and creates a situation that you want to succeed in. And of course, last but not least is tactics. All right, so let's go through this. Don, we'll use you as a test case because you said you like the fix and flip industry, right? So we'll work that backwards. And again, I have an order here, and Don said he wants to target fix and flip, which is, it's kind of like a target client or target situation, and that's fine. So we start with that and we can work backwards. You can reorder these. You can reorder these things, and that's great. In fact, you may go through all this and say, I want to focus on CRE in this, and when you get down to the agents, you find out that you have an amazing network of people that can bring you business startups, and you'll get business startups all day long. And great, well then maybe we should go back and do the whole thing over again with the reality of you have an amazing network of people that can bring you startups, and see if it works for you. And you think, okay, well, we do have I have a lot of people that bring me startups. We have 5 different ways to finance startups. Well, that's I got a lot of product options. That's really good. And you may think I'm really interested in the franchise space in Texas or whatever, wherever you are. So you may do this, and then when you get to the agent, start over again. That's totally fine. But that's why we go through it, so it's all intentional. We can make sure that, conversely, you may go through all this and find out that you have no way to bring in agents that can bring you something, whatever you decided. All right, so let's go to Don. All right, so Don said fix and flip, so that's sort of a target client. Well, we know that fix and flip works for CRE and the credit card program and the retirement rollover program. Those are all very good. If I was Don in the situation, I probably wouldn't spend a bunch of time learning about equipment. I'd know generally what is needed for it, but I wouldn't spend a lot of time on that. And term loans, no reason to spend a lot of time on the term loans. What am I forgetting? That's probably it, right? So I know my product mix. It's going to be primarily real estate, secondary UBF, and BDRA. That's the primary mix there. I'm not going to spend a lot of time learning about revenue-based advances because I'm probably not going to be offering those. It's really hard to offer a revenue advance to a fix and flipper. It's just not going to happen, so don't waste any time on it. So now I know my product mix: primary CRE, secondary UBF, and BDRA. Then I'm going to think, if I were you, Don, I think, where am I? So we'll do geography-wise. Let's first think about where you are. Now, if you're sitting there thinking, he's talking about where I am, but I'm a really strong internet marketer. Now, I've said choose your tactics last, but if you know that you're really strong in a certain marketing tactic, well, of course, you want to keep that in mind as you're going through this. If you're a really strong internet marketer, then maybe you don't want to focus on, you do a hyper-local focus because you know how to bring in clients from all across the U.S. Awesome. Well, maybe if that's the reality, your geography could be anywhere in the U.S. Or you may know that as a really good internet marketer, you have ways to target specific states. Well, great. Maybe in the process we find out that one state is getting a lot of attention and there's other states that are under marketed too. Well, then great. Then who cares then let's just pick a target geography that way by trying to recognize some area that's underserved. But to go through it again, fix and flip, we've got our product mix at CRE, UBF, and BDRA as the sub products. Your target client is going to be somebody in the fix and flip, somebody trying to do a fix and flip, either within a specific geography. I think more frequently you guys are going to be better off by picking a geography. If you don't know if you're strong internet marketer, then you're not, and you don't want to assume you are. So let's pick an area. Or if you happen to know that you have a strong contact in one of those fix and flip educational groups, right? We had a prospective member office we talked to a while back that had a very strong connection with the number 2 person at a fix and flip training network marketing group. And so we were talking to her about, say, you don't have to worry about industry or geography. Industry is sort of fix and flip. You don't have to worry about geography because you're just going to tie in with this group that has a network of agents that are all going to be referring deals. That's a slam dunk. So again, if I'm Don, I'm thinking fix and flip. I know my target products, and then whether or not I'm going to go after geography is going to depend on how you market. So Don, do you have an idea on what kind of marketing you're good at, or do you have experience with? Or perhaps do you have a strong network in a specific industry that comes across fix and flip on a regular basis? Because those are the questions that you'd want to answer next. If you're able to type in, go for it. If not, don't worry about it. Okay, 1 second. Real estate investment advisors. So you visit real estate investment advisor groups. Awesome. So if that's what you're going to do, then hopefully you have some in your area. It's going to make it a lot easier to visit them if they're local, or of course you can call. Those are different, right? But if you can tie in with those groups, then you want to start with the local ones and get some traction locally, because you're going to be able to. The first relationships that you develop, if you don't have them already, are going to be harder because you need to create a connection. It's easier to do that in person. So if I were you, that's what I would do. Maybe you're already doing this. Great. Maybe you already have the connections. Awesome. So then it's figuring out whether or not you want to sign them up as agents, get them into the agent portal to give them the tools, or whether or not you just want to personally manage them and get them referring directly to you. Either way, that's your choice, and it's an important one. There's times when the agent portal is really good for helping people to create leads, and there's times where it's counterintuitive and you might worry about losing. It's like if you have people that refer clients to you and they're not asking for money, then maybe you don't want to put them in the portal at all because you don't want them to hear that it's even a possibility to be paid, and that's a legitimate reason not to put somebody into the portal. Alternatively, if you know people where they'd be very excited to have the tools, they'd like to be able to email something to you, have it go direct into the system, and they want to actually market some, and they would benefit from those tools, and put them in the agent portal. All right, so you're going to go visit these groups. Well, there you go. You got your product mix. You have your target client nailed. Geographically, you would start locally and then grow from there, unless for some weird reason you have super strong connections in Chicago and you want to start there. Well, good. You know your target agent, or whether or not you're going to bring on an agent. Initially, you probably just do it yourself, and then afterwards, you could start signing up people who come across Fix and Flip as your agent. Now, when you're thinking about this, one of the things that happens is we have offices that come in and they sort of decide what their path is going to be. And then we assign them some test agents to start working with, so you can get used to the process of working with agents. And then one of those test agents tells them about an opportunity in Florida. And then the next test agent tells them of an opportunity in Washington. And the next thing you know, the plan is thrown out the window, and they have these ideas that they want to chase whatever rabbit goes across their path, and they're working on stuff so disjointed that they completely forget about a strategy at all. And they're doing RBAs and retirement rollovers in California, and there's some land development deal in Montana. Every single call is something different, and it could be very distracting, and if a couple of those fall through, it could be very discouraging. What I want to say is, we're talking about your focus, and we want to make sure to remember that and follow it. And of course, it doesn't mean that if you get an opportunity that comes by, you should ignore it. Because in the end, what matters more than anything else is that you are getting deals done so that you can cash flow your operation. This is your long-term market strategy. But the important thing is, you got to do a little bit of both, right? You have to capitalize on the opportunities that come by you without completely losing track of your focus and your long-term vision. Because your long-term vision is making it easy for you to get a lot of deals, creating a reputation and a defensible market position. Doing every single random deal that comes across your desk is not a defensible position, because you're going to be beat out by people that are focusing on whatever each random thing is that comes by. So, grab the opportunities that come in front of you, but do that a little bit until you get experience, and then let's make sure to have a specific focus that we're working on, and let's apply the tactics that we're talking about here. So again, Don tomorrow might get somebody who has a restaurant in California and needs a revenue advance. Awesome, right? Well, it's good to get experience in all these products, and you can make money fast with a revenue advance, so there's nothing wrong with it. But don't forget what your target focus is, so that we can intentionally solicit agents that will bring you the kind of business that you want. And there's nothing you can do to stop somebody from bringing you all sorts of random business. It's going to happen. It's just going to happen. The more success you have in one product, the more other random stuff you're going to get that comes into you. And that's great. But if you start chasing the other stuff too much, you're going to lose that core function, which is really the thing that's going to grow and bring in other stuff. All right, so that's another run through. By Monday, you're going to have your call with Trey, where he goes over sort of the weekly update. Tuesday, look for our next call to be about the Market Focus Workbook, where we're going to be sending those out, and you should be going over that with your on-site partnership manager in order to make sure that your whole plan works, that each segment of your plan works. And then we'll start testing it, and we may find that item 3 was a bit off, but item 1, 2, and 4 all worked. And so we can adjust your target situation. You want to know which thing is not working, right? If you haven't made all these decisions and something isn't working, you don't know what's not working. You don't know if you're going after the wrong product, the wrong client, the wrong industry, the wrong geography, the wrong situation, or you get the wrong agents. It could be everything. Once you make all these decisions, then you can see what's wrong. You say, I seem to be getting a lot of fill in the blank agents signing up. That's great. I'm getting referrals, but none of the referrals are what I was expecting. Well, then you need to decide, is your target product and client more important, or do you just capitalize on the agents who you found are easy to sign up and they're bringing you X, Y, and Z instead of A, B, and C? Maybe X, Y, and Z are great and it works for you. Well, awesome. Make that adjustment and we'll change your marketing on your website and everything in order to service that. But don't just sort of let it happen unintentionally, right? Be watching the variables so that we can adjust them and make it perfect. I hope this has been beneficial for you. I'm happy to open it up for questions. Anybody have any questions or comments about any of the items that we discussed today?
Hey, Jim, it's Brett.
Brett, how you doing?
Good. And I mean, this is totally helping my office as I'm a new office, and as you explained, the rabbit trail is exactly where my office was kind of fielded. I I tried to do local, and local has some. It's very competitive as to what markets you go into, of course, and the fix and flip is definitely in the real estate, of course, is the lot bigger margins as to where we all want to be, but
Uh-huh.
not necessarily as fast as close, just because there's lots of
Appraisals,
areas to look at. Yeah.
right?
So the UBF program, of course, is your best commodity, I think, for most offices, and that's where um, have my energy steered towards, and I'm eager to fill out the handbook and target my market independently and work off agent feed for my office, as not defining my geographic locally as to where I can help feed agents to the bottom line is exactly where I'm focusing now. So
Okay,
I,
great. Well, like I have a question for you. So, I do think that local could still work for you. And when you say the local is competitive, I'm kind of curious to hear what have you been coming up? Do you find yourself actually competing with the banks? Banks will have a very strong local presence. The problem is
yeah.
they decline almost everybody. So even though there's competition, it shouldn't necessarily disqualify you unless maybe you're looking at the wrong client. So can you talk about what you've done locally? Because our first client that we got from you was a local business.
Correct. And in most cases, I've gone after local commercial real estate on that side, and investment property sides of things. And most have that relationship with banks, and they tend to be reserved as to touching their 401ks. And it's just I'm looking to close some deals, so then you have the notoriety to move forward with it.
Hmm.
A lot of them have that relationship with banks on a 8% margin usually, and they're comfortable with that. And it just seems to be somewhat of a reserve for them to sign a bottom line to work with someone differently, other than what they've done in the past. So
Yeah, so I'm going to throw in some comments and then you can correct me if
sure,
I'm
yeah,
misunderstanding.
sure,
People that qualify for bank financing, you know, there's that's awesome, and you're not going to be
right,
able to compete with that. Um, but at the same point, if they, it's even if they qualify for bank financing regularly, they may come across deals that the banks won't touch. Um, so when you say bank, are you talking about fix and flip specifically? Maybe they already have a lender that they're working with on a regular basis,
correct.
or
And
are you talking about actual people going straight to the bank?
most of them going straight to the bank, trying to pull what they're currently using. And the clients that I've been going after currently, I know that they have a 401k that they can tie into, and I'm trying to um, prove to them that's a beneficial way to move forward. As it's free money essentially to them. And usually they have a great credit reference as well,
Right.
as far as score, so you can get them $100,000 in funding on and they aren't using their cash, necessarily hard-earned cash, to buy their next land deal. And so it's a lot better way to forecast dollars moving forward. And it's they like I had a for instance, I had a client that I could have moved about a million two forward, which is a $6,000 investment on a 401k rollover, and a say $100,000 in credit cards, which is a really small investment. And then they ended up going to the bank getting a 9 or 10% loan, which we would have saved them, and
Right.
which was only on a $200,000 loan. And we could have rolled over a lot more for them. So it's just a matter of um, I guess steering it practically forward, and
Yeah, here's
work.
I'm kind of I'd like everybody to hear this. I talk about the BDRA program as the best possible way to finance a business because it just is. At the same point, the thing could be darn hard to sell because people are understandably very protective of their retirement funds. And at Finance Store, once we launched our own BDRA product, when we wanted to grow it, we had a devil of a time actually growing it. The only way we found to really do it consistently was to go after the franchise industry, because alternatively in the franchise industry, it's all everybody talks about. Everybody uses retirement rollovers. It's very common. And so when people hear it's common, then they're more comfortable with it. Outside of it, when you bring it up and they've never thought of it before, there's always initial pushback. And the only way to really sell it, in my opinion, is to really get them to understand that it's not the last resort. I was talking to my neighbor the other day who's been doing a startup. Now he's 14 months into it, and have been trying to get investors. And he was telling his wife, well, as a last case resort, we can dip into the retirement funds. And I was, trying to communicate to him, it's the opposite of the last case resort. It's better than any investor you can bring in because you don't have to answer to anybody else. And instead of paying interest to the bank, you're paying interest to yourself, or you're growing your own portfolio faster than the market would. They really have to understand. That's why I use those words. It's the best possible way to finance your business. So because you got to flip their whole understanding. It's not the worst case. It's not the last resort. It's not the thing that you do when you're totally screwed. That's how emotionally they feel about it. It's the bet. So what I try to do is I hit that fast, and if I don't see somebody understanding that, I don't waste a lot of time trying to convince them. Anyway, just that's for everybody to know, because when somebody's dead set about not touching their retirement funds, often they're dead set. Often you're not going to bring them around. All right, so what have you done to try to bring on local business?
For my office personally, it's just been word of mouth, and so I'm going to start utilizing more social media because I'm strong in that. I just haven't gone there because I really haven't wanted to be the nuisance. I didn't want it's
Right.
I don't want to be blocked before I get going and on things. So I was trying to put a few deals under my belt before I went there, and to use them as
What type of social media are you talking about?
um, Facebook mainly.
Okay, so you're talking about paid Facebook marketing or?
And free and or both. I I manage a couple sites that have several thousand people on them, so
Okay, that's
I'm
good.
really tenderly trying to not abuse it, because I usually kick people off that abuse like window cleanings and
Right.
that so.
Okay, well that's interesting. I know more about how to use LinkedIn groups, because LinkedIn groups tend to be a little more open to business promotion, since that's what the whole platform is about, really.
Mhm.
Um, you're right to say that people tend to be pretty careful about that kind of a thing. So obviously every social media platform is very different, and you advertise it in a very different way. So it's good for you to be careful about how you approach that. Are you trying to do that for local business, or are you then trying to do it for non-local business for Facebook? They tend to be
Primarily
local
local.
clients. Okay.
For my office to be local, yeah.
Okay. Well, that's good. Um, one of the weird things about finance that I say it's weird, it seems a little weird to me, is a lot of people look at the act of getting a loan as some people take the stance that admitting that they had to get a loan is like something bad, or like airing their dirty laundry. And so we've had clients that don't want us to tell anybody that they got a loan because, I don't know, they feel like it's an admission. Maybe they're thinking of themselves in a tough situation and they feel like just admitting they get a loan is a bad thing. So if I were you, I would try to figure out some way, and I don't have the answer for that, some way for people to be proud about the fact that they're seeking financing, and maybe create a little award in the group, like let's reward businesses that are growing and seeking financing to do so. I don't know if there's a way to do that, but if you could find a way for people to brag about the fact. So like if somebody's doing a startup and they're looking for investors, they're bragging about it. They're promoting their business and they're putting themselves out there trying to get investors. If you can get that same attitude for seeking financing, in fact, maybe that's it. Find a way, tell people, hey, we want to open this up in this forum. If you're seeking investors for your company, put it up here, and then every one of those people you can offer bank financing to, because getting investors is like almost impossible for most people. And a lot of people seek investors for companies that would never qualify for investor funding. And that's a great way to get up to. In fact, when I started in this business, the very first thing I did that was very successful for me is I found a website where people went on to tell people that they were looking for investors, and I just offered them bank financing. And that's how I got my first clients. I got 3 clients in my first month with absolutely no support or help in any way from that type of a forum. So if you create a local forum, and to give you guys something else, if you're familiar with Lendio, they're a big player, a big online player. Before they were Lendio, they were, heck man, now I'm like forgetting their name. Shoot. I forgot their name. Before they were Lendio, there was something else. And what they did, their marketing strategies, they went around to different cities and had fast pitch competitions where people get up and they pitch their business concept, and then they sold them services to help get investors, and then they transitioned to bank financing because, as I would hope you know, bank financing is more consistent and easier to do than investor financing, which is super hard, and people spend a ton of time and get nothing. So they have these fast pitch competitions. If you could get something locally like that, get local businesses to do presentations about their business, and then you could offer financing to all of them. You could be your own sponsor for your own event.
Right.
Anyway, I'm just spitballing ideas. What I'm hoping other people get from this, if these concepts are totally irrelevant to you, is how we're thinking through a way to do something that gives you a competitive advantage, right? Like Brett, you could be the guy for startups in your area seeking investors and run a monthly fast pitch competition, and become an event that, and you, through that, you'd actually get people who invest in local businesses to come, and they'll have people coming to them all the time that they turn down, and they could turn them over to you because you're the guy for running a local meeting. I mean, that's a really interesting way to get repeat business and grow a reputation in the area that I think could be kind of fun, because it's fun watching people pitch their company for investors. So anyway, we could talk about more stuff, but that's definitely going to people who have existing bank relationships and are qualifying for bank financing for real estate deals. That's tough. You want to find the people that don't qualify or used to qualify and now they don't, or they own land or they want to do their next purchase, but the bank turned them down. Maybe their credit got worse. Those are the kind of people where we can provide a lot of value and they don't have other options. We definitely, there's no benefit to try to talk somebody into taking a worse kind of financing if they qualify for better, and that's going to be hard long term. So, well, awesome. I'll go ahead and wrap it up, for this is getting a little bit long. I appreciate everybody that came on. Thank you, Brett, for giving some examples. Suzanne, Don, I appreciate your input. We'll wrap it up for the day. Have a great weekend. And if you're in the affected areas, then I hope you get the heck out of them, or I hope that it's not so bad. It's been some crazy weather recently. Look forward to talking to you guys next week. Next Tuesday, please come. I'll send out the form in advance, and then we'll talk about it on the call. And hopefully over the next week or two, everybody can complete it. And one of the hardest parts about putting this form together is, I hope you're hearing from this conversation that you can go through it and then you have to go back and redo it. And you need to do it with us, not on your own, because we'll help guide you away from things that are going to be a waste of time. We want you all to be successful. We only succeed when you succeed. So thanks everybody for coming on, and we look forward to doing a lot more deals together.